In this video we will talk about Rivian, the latest news, the surrounding market environment, and a recommendation on the best course of action. Before we start, if you appreciate my content, please like, comment and subscribe to my channel. Rivian, a prominent player in the electric vehicle sector, has recently revealed a series of noteworthy developments that have captured the attention of both investors and analysts. These significant updates, shared during the company's most recent quarterly earnings call, shed light on Rivian's strategic initiatives and their potential implications for both its market presence and stock performance. One central focus of this announcement is Rivian's plan to introduce an upcoming vehicle model that departs from its existing R1 platform. It holds the promise of being not only more compact but also more affordable, catering to a wider range of consumers. This strategic move underscores Rivian's commitment to broadening its customer base by addressing a crucial barrier to EV adoption: the price point. The potential of the R2 goes beyond its accessibility. It also lies in the expected reception by the market. Management's excitement is palpable as they eagerly await the R2's debut in the early months of 2024. This sense of anticipation is further fueled by the prospect of reaching a larger audience and potentially solidifying Rivian's position in the electric vehicle landscape. Analyzing recent performance indicators, Rivian's trajectory appears to be heading upwards. An impressive 60% increase in vehicle deliveries underscores the company's ability to translate demand into tangible results. What is even more significant is the enhancement in gross profit per vehicle, which has seen an impressive boost of $35,000. This financial achievement highlights the company's prowess in managing costs and optimizing production processes. However, the stock market landscape is a multifaceted one. Rivian's stock price concluded at $22, a figure influenced by a combination of factors. Technical indicators are signaling a possible downtrend, raising concerns among investors and analysts. Additionally, the Q2 earnings report has prompted discussions about Rivian's valuation, sparking conversations on whether the market may perceive it as overvalued. As we turn our attention to the upcoming week, a series of events loom on the horizon. The release of retail sales data and the impending Fed meeting minutes are expected to cast a spotlight on market sentiment. These events could play a crucial role in steering the trajectory of Rivian's stock price, further underscoring the dynamic nature of the stock market. Amidst these short-term technical challenges, a thread of optimism persists. Positive options activity signals a sense of bullish sentiment, suggesting that market participants foresee the potential for upward movement in Rivian's stock. This optimism is led by analyst James Picario, who has set a target price of $30. This projection indicates an expectation of growth beyond immediate hurdles. Looking beyond the financial indicators, Rivian's internal strategies come to the forefront. During a recent question and answer session, Rivian's CEO responded to questions from Wall Street analysts, offering insights into the company's profit margins. Notably, the CEO highlighted an impressive 35% reduction in material costs associated with their EV program. This reduction underscores the company's dedication to improving operational efficiency and maximizing profitability. There is an expectation of a ripple effect resulting in similar cost reductions for Rivian's existing R1 lineup. This expectation is based on an upcoming shutdown, which is anticipated to provide a window of opportunity for implementing streamlined production processes. By leveraging this window, Rivian aims to further enhance its efficiency and potentially bolster its overall bottom line. One of the most intriguing aspects of Rivian's strategy lies in its profit margin targets. The company is steadfastly pursuing the goal of achieving a 25% gross profit margin. This ambitious target serves as a testament to Rivian's commitment to sustainable growth, further solidifying its credibility in the eyes of investors. Of course, Rivian's own fundamentals are not the only elements that we should consider. The external forces are also very significant for its price action. The electric vehicle sector, once hailed as a beacon of innovation and growth, now faces a complex web of challenges that could significantly impact its equity value. A looming recession, increasing interest rates, geopolitical uncertainties, and persistent supply chain issues are casting shadows of doubt on the electric vehicle sector's previously robust outlook. Firstly, the specter of a recession looms large over the electric vehicle industry. As economic indicators hint at a potential downturn, consumer spending patterns tend to shift, often favoring essentials over discretionary purchases such as electric vehicles. In a recessionary environment, potential electric vehicle buyers may defer their purchasing decisions, leading to decreased demand and sales. This reduction in demand could have a cascading effect on the equity value of electric vehicle manufacturers and suppliers, eroding investor confidence and potentially causing stock prices to decline. The rising tide of interest rates adds another layer of complexity to the situation. Central banks often raise interest rates to combat inflation or stabilize an overheated economy. However, higher interest rates can lead to increased borrowing costs for consumers and businesses alike. For the electric vehicle sector, which heavily relies on capital investments and consumer financing, higher interest rates can curb consumer affordability and dampen investor enthusiasm. This could weaken demand for electric vehicles and potentially undermine the equity value of companies operating within the sector. Geopolitical uncertainties further exacerbate the challenges faced by the electric vehicle sector. Trade tensions, international conflicts, and shifting global dynamics can disrupt supply chains, increase input costs, and disrupt the flow of goods and services. This vulnerability is particularly acute for the electric vehicle industry, which relies on a complex network of global suppliers for critical components like batteries and rare earth metals. Any disruption in the supply chain can lead to production delays, increased costs, and a general atmosphere of uncertainty that can deter investors from the sector, impacting equity values across the board. Supply chain issues, already a concern for many industries, are particularly detrimental to the electric vehicle sector. The intricate global network of suppliers, coupled with just-in-time production methods, makes the sector susceptible to disruptions like raw material shortages, shipping delays, or factory shutdowns. These issues can cascade down the value chain, leading to production halts and reduced sales volumes. Investors, attuned to the sector's growth potential, could react negatively to these setbacks, leading to diminished equity values for electric vehicle companies. As these challenges converge, investors are left grappling with a conundrum. The initial promise of the electric vehicle sector was built on innovation, sustainability, and the potential to reshape transportation. However, the reality of economic fluctuations, interest rate hikes, geopolitical uncertainties, and supply chain fragility have introduced significant volatility. The equity values of electric vehicle companies are now intertwined with the broader economic landscape, making them vulnerable to shifts in consumer behavior, investor sentiment, and global events. In this intricate dance between optimism and uncertainty, a nuanced approach to investing in the electric vehicle sector becomes paramount. Investors must balance the sector's long-term potential with the short-term challenges it faces. While a looming recession, increasing interest rates, geopolitical uncertainties, and supply chain issues certainly pose risks, they also offer opportunities for astute investors who carefully assess the fundamental strengths of companies within the sector. Ultimately, the electric vehicle sector's equity value is now subject to a delicate interplay of macroeconomic factors and sector-specific dynamics. As the sector navigates these challenges, companies that can effectively manage supply chains, adapt to changing economic conditions, and demonstrate resilience may emerge stronger. Investors, in turn, must stay informed, stay adaptable, and exercise patience as they evaluate the evolving landscape and its impact on their investment decisions. In conclusion, Rivian's recent developments underscore the intricate interplay between innovation, financial performance, and market sentiment. The introduction of the R2, coupled with promising performance metrics and targeted cost-cutting initiatives, presents a multidimensional narrative of a company poised for expansion. As the stock market navigates various factors, the spotlight remains on Rivian, a company that continues to shape the electric vehicle landscape with its strategic moves and forward-looking vision. Stay tuned as the story unfolds.